Question 1. Personal auto policy PAP. Which of the following is NOT covered under the collision coverage of a personal auto policy PAP? A. Damage to the insured's vehicle caused by hitting a tree. B. Damage to the insured's vehicle when it is hit by another vehicle. C. Damage to the insured's vehicle from a hailstorm. D. Damage to the insured's vehicle after flipping over due to a sharp turn. Answer C. Explanation. Collision coverage under personal auto policy PAP covers damage to the insured's vehicle that results from a collision with another vehicle or object, e.g. hitting a tree, flipping over. However, damage from events like hail, fire, or theft is typically covered under comprehensive coverage, also known as other than collision coverage. Comprehensive coverage protects against events beyond the insured's control, like weather-related damage. This distinction is important in understanding what types of perils are covered by different sections of the PAP. Question 2. Scenario-based Virginia-specific insurance regulations. John, a licensed insurance producer in Virginia, has been approached by a client who offers him a monetary gift in exchange for securing a lower premium on their auto insurance policy. What should John do in this situation according to Virginia state regulations? A. Accept the gift but ensure the policy application is accurate. B. Decline the gift and report the client's attempt to the Virginia Insurance Commission. C. Accept the gift and offer a low premium as a customer loyalty reward. D. Inform the client that gifts can be exchanged as long as they don't exceed $50. Answer B. Explanation. According to Virginia's unfair trade practices laws, accepting gifts or any form of compensation for altering premiums or policy terms is considered rebating, which is illegal. Rebating is an unfair trade practice where inducements are offered to encourage the purchase of insurance. Insurance producers have fiduciary responsibilities and are required to act in an ethical manner. John must decline the offer and should report the attempt to ensure compliance with ethical standards and state law. Violating these regulations can result in severe penalties, including fines, suspension, or revocation of the producer's license. Question 3. Workers' compensation. In Virginia, which of the following is a key benefit provided by workers' compensation insurance to employees who are injured on the job with a retirement pension? B. Coverage for legal fees in the event of a lawsuit. C. Death benefits and compensation for medical expenses. D. Reimbursement for job-related training courses. Answer C. Explanation. Workers' compensation insurance in Virginia provides various benefits, including medical expenses, death benefits, and compensation for lost wages due to work-related injuries or illnesses. These benefits are designed to ensure that employees receive the necessary financial and medical support without having to prove employer negligence. Death benefits are also provided to the dependents of an employee who dies as a result of a job-related injury. Legal fees and retirement pensions are not covered by workers' compensation insurance, and reimbursement for job-related training courses falls under different employment programs, not workers' compensation. Question 4. Commercial general liability (CGL). Which of the following is typically NOT covered under commercial general liability (CGL) policy? A. Bodily injury to a customer who slips and falls on the insured's premises. B. Property damage caused by a contractor while working on the insured's behalf. C. Injuries to an employee who is injured while performing their job. D. A lawsuit against the insured for advertising that infringes on another company's trademark. Answer C. Explanation. A commercial general liability (CGL) policy typically provides coverage for bodily injury, property damage, and personal and advertising injury caused by the insured's business operations. However, injuries to employees while performing their job are not covered under a CGL policy but are instead covered by workers' compensation insurance. Workers' compensation provides medical benefits and wage replacement to employees injured in the course of employment, which is distinct from the liability coverage provided under a CGL policy. Question 5. Professional liability insurance errors and omissions. A licensed attorney in Virginia has purchased a professional liability insurance policy. Which of the following is most likely to be covered under this policy? A. An injury sustained by a client while visiting the attorney's office. B. A lawsuit filed against the attorney for mishandling a client's legal case. C. Property damage to the attorney's office during a natural disaster. D. A dispute with an employee over salary and benefits. Answer B. Explanation. Professional liability insurance (EO) provides coverage for claims arising from errors, omissions, or negligence in the performance of professional services. In the case of the attorney, if a client files a lawsuit due to the mishandling of a legal case, this would be covered under the E policy. On the other hand, bodily injury, like a client getting injured on the premises would be covered under general liability insurance, and property damage or employee disputes would fall under different types of policies, such as commercial property insurance or employment practices liability insurance. Question 6. Umbrella and excess liability. Which of the following accurately describes the difference between an umbrella liability policy and an excess liability policy? A. An umbrella policy provides broader coverage, including covering claims that are not covered by underlying policies. B. An umbrella policy only covers specific losses defined in the primary insurance policy. C. An excess liability policy increases the policy limits of the insured's life insurance. D. An excess liability policy provides coverage for losses that are not related to business operations. Answer A. Explanation. An umbrella liability policy provides both additional liability limits and broader coverage compared to the insured's primary insurance policy. It can cover claims that may not be included in the underlying policies, such as libel or slander. An excess liability policy, on the other hand, strictly increases the limit of liability on existing primary insurance policies, but does not expand coverage beyond what is included in the primary policies. This distinction is important for businesses that need both additional coverage limits and protection against risks not addressed in their primary insurance. Question 7. Virginia Workers' Compensation Regulations. In Virginia, how long does an employer have to report an employee's work-related injury to the Virginia Workers' Compensation Commission? A. Within 7 days of the injury. B. Within 21 days of the injury. C. Within 30 days of the injury. D. Within 48 hours of the injury. Answer B. Explanation. Under Virginia Workers' Compensation Regulations, employers are required to report an employee's work-related injury to the Virginia Workers' Compensation Commission within 21 days of receiving notice of the injury. Failure to report within this time frame can result in penalties for the employer. This requirement ensures that employees can receive timely benefits and medical care for their work-related injuries. Question 8. Scenario-based personal umbrella policy. Samantha owns a boat and has personal liability coverage under her homeowner's insurance. While operating the boat, she accidentally injures a swimmer, resulting in a $750,000 lawsuit. Samantha's homeowner's policy has a $300,000 liability limit. She also has a $1 million personal umbrella policy. How much will her umbrella policy pay toward the lawsuit? A. $0. B. $450,000. C. $300,000. D. $750,000. Answer B. Explanation. A personal umbrella policy provides excess liability coverage above the insured's underlying policies. In Samantha's case, her homeowner's insurance will pay up to its $300,000 liability limit. The umbrella policy will then cover the remaining $450,000 of the $750,000 lawsuit. Umbrella policies are designed to protect individuals from large claims that exceed the limits of their primary insurance policies, making them an essential risk management tool. Question 9. Homeowners insurance. Section II. Liability coverage. Which of the following scenarios would most likely be covered by the liability section of a homeowner's insurance policy? A. Damage to the insured's own home caused by a fire. B. Bodily injury to a guest caused by the insured's dog while on the insured's property. C. Theft of the insured's jewelry from their home. D. Water damage to the insured's basement due to flooding. Answer B. Explanation. Liability coverage under a homeowner's insurance policy protects the insured against claims made for bodily injury or property damage for which the insured is legally responsible. In this case, if a guest is injured by the insured's dog, the bodily injury liability coverage would apply. Damage to the insured's property, such as fire or theft, would be covered under different sections of the homeowner's policy, not liability. Flooding, however, is usually excluded unless the insured has separate flood insurance. Question 10. Commercial auto policy. Under a commercial auto policy, which of the following vehicles would typically not be covered? A. A delivery van owned by the insured business. B. A rented truck used for a business delivery. C. An employee's personal car used occasionally for business purposes. D. A company-owned vehicle that is used exclusively for personal use. Answer D. Explanation. A commercial auto policy covers vehicles that are owned, leased, or rented by a business and used for business purposes. The company-owned vehicle used exclusively for personal use would not typically be covered under the commercial policy, as it is not used for business operations. Instead, this vehicle would need to be covered under a personal auto policy. Vehicles used for business purposes, like a delivery van or rented truck for deliveries, would be covered under the commercial auto policy. An employee's personal vehicle used occasionally for business may also be covered under certain endorsements to the policy. Question 11. Dwelling policy forms. Which of the following perils is covered under IAN Basic Form Dwelling Policy? A. Theft. B. Vandalism and malicious mischief VMM. C. Fire and lightning. D. Earthquake. Answer. C. Explanation. IAN Basic Form Dwelling Policy covers specific named perils including fire and lightning, internal explosion, and optionally vandalism and malicious mischief VMM. However, it does not automatically cover theft or earthquake, which would require additional coverage, or higher level forms like DEPA 2 or DEPA 3. DEPA 1 offers the most basic level of coverage among dwelling policies. Question 12. Business Owners Policy BOP. A business owner's policy BOP typically provides coverage for which of the following types of businesses? A. Large manufacturing companies. B. Small to mid-sized retail businesses. C. Corporations with more than 500 employees. D. Nationwide restaurant chains. Answer. B. Explanation. A business owner's policy BOP is designed for small to mid-sized businesses including retail stores, small offices and restaurants. It combines property and liability insurance into one package, making it cost-effective for smaller businesses. Large corporations, manufacturers, or national chains usually require specialized commercial policies, not a BOP, due to their higher risk exposure and larger operations. Question 13. Inland marine insurance. Inland marine insurance is designed to cover which of the following? A. Cargo shipped by sea. B. Movable property and equipment. C. Fixed properties such as buildings. D. Personal automobiles. Answer. B. Explanation. Inland marine insurance covers movable property that is not confined to a fixed location. It includes items like contractors' equipment, tools, and fine art that may be transported or used in various locations. While the name might suggest water-based coverage, it actually refers to property in transit or off-site. Cargo shipped by sea is covered by ocean marine insurance. Question 14. Builder's risk insurance. Which type of insurance is designed to cover buildings and structures under construction? A. Commercial general liability insurance. B. Inland marine insurance. C. Builder's risk insurance. D. Equipment breakdown insurance. Answer. C. Explanation. Builder's risk insurance covers property and structures while they are under construction. This includes protection against perils like fire, vandalism, and theft. It also covers materials and equipment on site. Builder's risk insurance is essential for contractors and property owners during the building phase. Question 15. Flood insurance. Flood insurance policies in the U.S. are typically provided through which program? A. National Flood Protection Program (NFPP). B. Federal Emergency Management Agency (FEMA). C. National Flood Insurance Program (NFIP). D. Property Casualty Insurance Compensation Fund. Answer. C. Explanation. Flood insurance in the U.S. is primarily provided through the National Flood Insurance Program (NFIP), which is managed by FEMA. NFIP offers flood insurance to property owners, renters, and businesses in participating communities. Flood insurance is not covered under standard homeowners or commercial property insurance policies and must be purchased separately through NFIP or private insurers. Question 16. Personal auto policy (PAP). Which of the following types of coverage under personal auto policy (PAP) would pay for damage to the insured's vehicle in a hit-and-run accident? A. Liability coverage. B. Medical payments coverage. C. Collision coverage. D. Comprehensive coverage. Answer. C. Explanation. Collision coverage under personal auto policy (PAP) pays for damage to the insured's vehicle resulting from a collision, including hit-and-run accidents. Liability coverage pays for damage the insured causes to others, while comprehensive coverage pays for damage from non-collision related events, such as theft or vandalism. Medical payments coverage pays for medical expenses for the insured and passengers. Question 17. Commercial property insurance. Coinsurance clause. Under a commercial property insurance policy with a coinsurance clause, if the insured fails to meet the required coinsurance percentage, how is a claim settlement affected? A. The full claim amount will be paid regardless of coverage. B. The insured will receive a prorated payment based on the amount of coverage purchased compared to the coinsurance requirement. C. The insurer will deny the claim entirely. D. The insurer will pay a flat rate of 50% of the claim. Answer. B. Explanation. A coinsurance clause requires the insured to carry coverage equal to a specific percentage of the property's value, typically 80%, 90%, or 100%. If the insured fails to meet the required percentage, they will receive only a prorated payment for any claims, calculated as a ratio of the actual coverage purchased versus the coinsurance requirement. The insured essentially becomes a coinsurer for the uncovered portion. Question 18. Cyber liability insurance. Cyber liability insurance is designed to protect businesses from which of the following risks? A. Employee workplace injuries. B. Natural disasters like hurricanes. C. Data breaches and cyber attacks. D. Product liability claims. Answer. C. Explanation. Cyber liability insurance protects businesses against losses related to data breaches, cyber attacks, and other internet-based risks. It covers expenses like data recovery, notification costs, legal fees, and third-party liability for breaches of sensitive information. With increasing cyber threats, this insurance has become critical for businesses that handle customer data and rely on digital operations. Question 19. Workers' compensation insurance. Under workers' compensation insurance, which of the following types of injuries would typically not be covered? A. An employee injures their back lifting heavy boxes at work. B. An employee slips and falls in the company parking lot on their way to work. C. An employee develops carpal tunnel syndrome from repetitive tasks at work. D. An employee is injured while volunteering at a non-work related charity event. Answer. D. Explanation. Workers' compensation insurance covers injuries or illnesses that occur in the course of employment. Injuries that happen while an employee is engaged in non-work related activities such as volunteering at a charity event would typically not be covered. On the other hand, injuries like lifting heavy boxes, slipping at work, or developing repetitive strain injuries are generally covered by workers' compensation. Question 20. Commercial auto insurance. Symbols in a commercial auto policy. Which symbol provides the broadest coverage for vehicles? A. Symbol 1. Any auto. B. Symbol 7. Specifically described autos. C. Symbol 8. Hired autos. D. Symbol 9. Non-owned autos. Answer. A. Explanation. Symbol 1. Any auto provides the broadest coverage under commercial auto policy. It includes coverage for any auto the insured owns, hires, or uses for the business. It is the most comprehensive option available. Symbol 7 limits coverage to specifically described vehicles on the policy, while symbols 8 and 9 provide more limited coverage for hired and non-owned autos, respectively. Question 21. General liability insurance. Occurrence versus claims made. Which of the following statements is true regarding the difference between an occurrence policy and a claims made policy in general liability insurance? A. An occurrence policy only covers claims made within the policy period. B. A claims made policy covers claims made after the policy expires, regardless of when the event occurred. C. An occurrence policy covers incidents that happen during the policy period, even if the claim is made after the policy ends. D. A claims made policy covers incidents that occur during the policy period, even if the claim is made after the policy ends. Answer. C. Explanation. An occurrence policy covers incidents that happen during the policy period, even if the claim is made years later, as long as the incident occurred while the policy was active. A claims-made policy, on the other hand, only covers claims if both the incident and the claim are made during the policy period or within an extended reporting period. Question 22. Homeowners insurance. Section 8 coverage. Which of the following is covered under Section II of a standard homeowners insurance policy? A. Fire damage to the insured's home. B. Damage to personal property inside the home. C. Liability for injuries to others on the insured's property. D. Loss of use due to a covered peril. Answer. C. Explanation. Section II of a homeowner's insurance policy covers personal liability and medical payments to others. This includes liability coverage if the insured is found responsible for injuries to others or property damage. Fire damage to the home and personal property is covered under Section I, and loss of use due to a covered peril is also part of Section I. Question 23. Business income coverage. Business income insurance, also known as business interruption insurance, compensates a business for lost income resulting from A. Employee theft or embezzlement. B. A covered peril that forces the business to temporarily close. C. A general economic downturn. Answer. B. Explanation. Business income insurance covers the loss of income a business experiences when it has to temporarily close or reduce operations due to a covered peril, such as a fire or natural disaster. It helps replace lost profits and covers expenses like rent and payroll during the closure. It does not cover theft, economic downturns, or liability claims. Question 24. Umbrella insurance. Which of the following is a key feature of an umbrella insurance policy? A. It provides coverage only for business-related liabilities. B. It acts as primary insurance for personal liability. C. It provides additional liability coverage beyond the limits of underlying policies. D. It only covers intentional acts of the insured. Answer. See explanation. An umbrella insurance policy provides extra liability coverage beyond the limits of the insured's underlying policies, such as homeowners, auto, or general liability insurance. It acts as secondary or excess coverage and kicks in when the underlying policy limits are exhausted. It does not cover intentional acts or exclusively business-related liabilities unless specifically written for commercial purposes. Question 25. Commercial general liability insurance. Completed operations. What type of coverage does the completed operations portion of a commercial general liability CGL policy provide? A. Coverage for ongoing construction-related injuries. B. Coverage for damages arising after a project is completed. C. Coverage for faulty products manufactured by the insured. D. Coverage for personal injuries to employees. Answer. B. Explanation. The completed operations portion of a commercial general liability CGL policy covers claims for bodily injury or property damage that occur after a project is finished and handed over. This coverage applies to claims arising out of the insured's work or services, provided that the injury or damage results from the completed operations of the insured, not while the work was in progress. Question 26. Surety bonds. Which of the following best describes a surety bond? A. A type of insurance for protecting against natural disasters. B. A contractual agreement where the surety guarantees the performance or obligations of a principal. C. A liability insurance policy covering product defects. D. A policy that provides coverage for employee dishonesty. Correct answer. B. Explanation. A surety bond is a three-party contract where the surety guarantees to the obligee that the principal will fulfill an obligation, such as completing a project or meeting contractual terms. If the principal fails to meet their obligations, the surety compensates the obligee. Surety bonds are common in construction projects and government contracts. Question 27. Commercial auto insurance. Hired and non-owned autos. Which of the following best describes coverage for hired and non-owned autos? A. Commercial auto insurance policy. A. Coverage for vehicles rented or borrowed by the business. B. Coverage for vehicles owned by the business but not listed on the policy. C. Coverage for damages caused by uninsured drivers. D. Coverage for company-owned vehicles used for personal errands. Answer. A. Explanation. Hired and non-owned auto coverage under a commercial auto insurance policy provides liability protection for vehicles that are rented, leased, borrowed, or used by employees for business purposes but are not owned by the business. It covers the business's liability for accidents involving these vehicles, but does not provide physical damage coverage. Question 20. Personal umbrella policy. Self-insured retention. In a personal umbrella policy, what does self-insured retention refer to? A. The deductible amount for underlying insurance. B. The amount of loss the insured must pay before the umbrella policy responds if no underlying insurance applies. C. The total policy limit of the umbrella insurance. D. The minimum required coverage for an underlying policy. Answer. B. Explanation. Self-insured retention in a personal umbrella policy is similar to deductible. It refers to the amount the insured must pay out of pocket before the umbrella policy will cover a loss when there is no underlying insurance in place. If there is underlying insurance, SII usually does not apply, as the umbrella policy will take over after the underlying policy's limits are exhausted. Question 29. Commercial package policy CPP. Which of the following types of coverage can be included in a commercial package policy CPP? A. General liability, property, and workers' compensation. B. General liability, professional liability, and health insurance. C. General liability, property, and inland marine. D. General liability, property, and life insurance. Answer. C. Explanation. A commercial package policy CPP allows businesses to bundle different types of coverage into a single policy. Common coverages include general liability, property, inland marine, and others like crime insurance and equipment breakdown coverage. Workers' compensation, life, and health insurance are usually written as standalone policies and are not included in EPPs. Question 30. Equipment breakdown insurance. Equipment breakdown insurance typically provides coverage for which of the following? A. Theft of equipment from the premises. B. Damage caused by wear and tear to equipment. C. Mechanical or electrical breakdown of covered equipment. D. Natural disaster damage to heavy machinery. Answer C. Explanation. Equipment breakdown insurance covers the mechanical or electrical breakdown of covered equipment, including boilers, HVAC systems, computers, and manufacturing machinery. It helps pay for the repair or replacement of the equipment, as well as business income lost due to the breakdown. It does not cover damage from natural disasters, theft, or wear and tear.